Hey everyone, Couch Investor back to another video for today. So, in between the earnings report, I wanted to talk about two big fintech players. Well, one big fintech player, the other one could be rising to be a big one. StoneCo and Adyen. One is a Brazilian company, the other one is a Dutch company. Of course, if you've been watching this channel for a while, you've already heard about Adyen a couple of times. So I want to compare both companies because both stocks have been hit quite hard more recently. Now, before I started this video, news came out that, well, impacted Adyen even more. So what happened? Well, Worldline shares half on European economy warning. So the shares fell more than 50% on Wednesday to a record low after the French payment group warned that revenues and margins would take a hit this year from a deteriorating economic outlook. They said it expects revenue to grow 6 to 7% in 2023. That's down from a previous forecast of 8 to 10%. Now, the group blamed a gloomier economic outlook in Europe and particularly in Germany for the downgrades, adding that it had also cut ties with some merchants as it enforced a stricter approach to cybersecurity risks. We face now more challenges than we anticipated, even until very recently. The first one is obviously the economic slowdown in Europe, most particularly in Germany. Okay, so this is that. We also had Visa report earnings yesterday, which again, Visa, one of the best businesses to hold. They started by saying at the beginning of 2023, there was a lot of uncertainty around the macroeconomic environment with fears of a recession. There were many unknowns around FX, volatility, interest rates, and inflation. There was also some noise in our growth rates in early 2023 due to the effects of Omicron and the suspension of operations in Russia. Against that backdrop, Visa delivered. The total full fiscal year net revenue grew 11%, with GAAP EPS up 18% and non-GAAP EPS up 17%. Credentials grew 7%. We also surpassed 7.5 billion tokens. And then, turning now to the key assumptions, as we said consistently, we're not economic forecasters, and so at a macro level, we are assuming no recession in our outlook. So a pretty big contrast here between both companies, don't you think? So one might say maybe this is a Worldline specific issue. On the other hand, maybe Visa, because this is one of the best positioned companies out there. Visa is the exclusion here, is the uniquely positioned company, and they are not really affected by it, but maybe the rest will be. Could very well be, but let's have a look at StoneCo and Adyen. So, StoneCo and Adyen, you can see here the comparisons. The stock today in the next 12 months valuation compared to its 5-year mean. By the way, StoneCo right now, it's actually up 6.9% year to date. But in the last 3 months, it's down close to 25%. But putting that aside, again, you can clearly see here the same trend with many other fintech players. If you compare the stock valuation today, well, in the next 12 months, PE, EV to EBITDA, price to sales, price to free cash flow, it is much cheaper than its 5-year mean. And the same story here. Adyen, StoneCo, both of them are much cheaper today than historically. But of course, today we are in a very, very strange environment, especially if you look in the last 5 years. In the last 5 years, you also had that huge push of growth for most fintech players. Now, with regards to the growth expectations for StoneCo for the sales fiscal year 2023, 31.9% growth, fiscal year 2024 much slower, 7.4%, and fiscal year 2025, 6.6%. If we look at EPS, growth there is much better for the next coming years. So fiscal year 2023, huge growth, 152%, 2024, 23.8%, and then fiscal year 2025, 16.5%. If we go back to Adyen, we can see that, of course, for this year, it's much less than StoneCo, but still quite nice, 21.3%. But then in the next 2 years, growth continues to outperform, 23.28% in fiscal year 2024, and then 23.9% in fiscal year 2025. As for EPS, again, this year, yes, is a bit of a slowish year, 8.5%, but then reaccelerating in 2024 with 24.24% growth, and in fiscal year 2025, 27.5%. So there you have already a small picture when comparing both companies. Of course, do share your thoughts down in the comments below. And yes, StoneCo is still in Berkshire Hathaway's portfolio. It's just 0.04%. They still owe over 10 million shares, valued at around $136 million. The average buy price, though, is 18.44, so they're down 45% on that position. Now, before we jump into their financial reports, by the way, StoneCo will report their next quarterly earnings, I believe, beginning of November. So the numbers we're going to look at right now was last quarter plus their own outlook. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're on our way to reach 30,000 subscribers. So thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Okay, so you can clearly see here that growth is definitely, that this is definitely a growth company, growth stock. So total revenue, by the way, this is in Brazilian reais, not in dollars. You basically have to divide it by 5 to get USD. So total revenue increased 28.2% year over year. Adjusted EBIT actually increased 5.9 times year over year. Adjusted net income increased 5.8 times year over year. Of course, this is coming from a very, very low base. And with StoneCo, they did have that issue previously. It's one of the reasons why the stock actually crashed a lot since it went public. They had issues with their credit business. Then when we look at financial services, revenue there increased 32%, adjusted EBIT 7.5 times increase year over year. As for MSMB, this is actually micro, small and medium-sized businesses. The payment client base increased 43.3% and the payment net adds increased just 4.3%. As for TPV for that side, that increased 19.3% year over year and the take rate increased 38 basis points year over year. Now with regards to the key accounts, that has actually decreased when it comes to TPV, 32.5%, but the take rate increased. They basically said that they are going to focus a bit less on the key accounts and focus more on the micro and small medium-sized businesses. And so this is what has happened, but the take rate has increased. Then with regards to cash generation, yes, this is a cash generation business right now. Adjusted net cash position increased 57.1% year over year. And so with regards to the outlook for the Q3 quarter, they expect revenue to increase 4.1% quarter over quarter and 22.6% year over year. As for the micro, small, medium-sized businesses, TPV between 87 and 88 billion Brazilian reais. That's approximately 5% growth quarter over quarter and around 17% growth year over year. As for the adjusted EBIT, above $470 million, not adjusting for stock-based compensations, and compares with 447 million Brazilian reais for Q2. So that's an increase of 5.1% quarter over quarter, but an increase of 182.6% year over year. They also announced at the beginning of October that they have authorized a share buyback program under which Stone may repurchase up to 300 million Brazilian reais in outstanding Class A common shares. Of course, this means that the company views its stock as cheap enough for them to buy. They've got the money to do it, so why not? But again, remains to be seen when they'll actually buy their own shares. And so if we look at the graph, right now we're just under $10. We went down 30% since the highs back in July. Approximately $14 was that resistance point because it was rejected quite a lot in recent months. Now back at $10 or so, you can see that back in 2022, we did find some types of trading zones actually between $12 and $8 or so. It was swinging around those numbers for quite a while. So again, it's always good to see a base forming. Otherwise, you will see these swings quite a lot. Then with regards to Adyen, of course, huge crash here after they reported their earnings back in August. Then I put this line right here, 700, which by the way is 700 euros, not dollars. As a support line, we broke back under that, but currently we are sitting at what was previously a buying area back in September. Twice it was at around 645. Maybe the same will happen today, because again, today, because of the Worldline headline, the stock crashed another 6% or so. And yes, we are still oversold. Now, with regards to Adyen, of course, we already looked at those numbers. For those of you that don't know, they report first half of the year figures and second half of the year figures. They are also going to have an investor day where they're going to provide business updates. I believe it's November 8th. So this is going to be very important. But For the first half, processed volume increased 23% year over year. Of these volumes, total point of sales volumes were up 49% year over year. Net revenue was 739.1 million euros, up 21% year over year. EBITDA was down 10% year over year, and this figure was primarily impacted by increased wages and salaries stemming from Adyen's investment into scaling its global team for the long term. I'll add a bit more comments on that in a bit. And then free cash flow conversion ratio was 77% with capex at 7.6% of net revenue. And to confirm, yes, the business update for Q3 will be part of the November 8th Investor Day. Now, with regards to Adyen, the big issue why the stock actually dropped was not because the numbers weren't great or weren't good, because you've seen the numbers. I mean, growth above 20%, who doesn't like that? But the issue there was that the stock itself was very, very expensive because previously the growth was accelerating, was much higher before. Of course, we've hit a point where right now that's not possible anymore. Whether it's micro or macroeconomics, doesn't matter. At one point, the market just resets, looks at the company and is like, the premium here right now is just too high. And even today, you're paying a little premium when you buy Adyen, but that's because this is a premium business. Now, also, they said here, right? The EBITDA was down 10% year over year. Adyen, unlike other companies, have the luxury to invest more and more in their business when times are tough. They are now expanding their sales team worldwide, especially probably in the United States, but because that's one of the markets where they are feeling some pressures there. We've talked about previously Stripe, Braintree, etc., etc. But Adyen is showing the market that, look, we are a financially stable company, we are still growing, and we can invest when others cannot. And this is exactly what we're seeing right now. So, in my opinion, if you have to choose, that's just my opinion, if you had to choose a player, Adyen or StoneCo, of course, StoneCo, Brazilian-based player, Latin America, Adyen, a bit more global. In my opinion, I would rather go with the global players. Now, you might say, but don't you own Nubank and Meli? Yes, I do. But they focus on a way bigger market as well. Meli is probably going to catch all of LATAM at one point, and it's also in various businesses, not just the financial segment. And Nubank is just, it's just a too good of a business to pass on. So, in my unbiased opinion, I would say Adyen is probably a better pick right now than StoneCo. That's not to say that StoneCo is not a good company or a good investment. But if I had to choose one of the two, I would probably take Adyen right now. Of course, you might disagree, and if you disagree, please explain in the comments down below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.